Nizam Idris, Managing Director and Head of Strategy Fixed Income Group with the Macquarie Bank, joins us live from Singapore. Nizam, good morning and good to have you back on ET Now. Looks like Janet Yellen and Ben Bernanke clearly have indicated investors, don't worry, traders, we are there for you, we are not going anywhere, which means for the moment the loose monetary policy will continue.
Yeah, I guess that's also the important point that tapering could still happen, although tapering doesn't or shouldn't be equated as a move to tighten monetary policy. So yeah, I mean, easy monetary policy will continue. Rates will remain pretty low for a long time. Although, in my view, tapering will still need to be put in place. And possibly, in my view, that could actually happen from March 2014.
Nizam, how are you viewing the Indian rupee as against the other emerging market currencies? And how geared up is India to handle tapering whenever it comes by?
Those are two very important questions. In the first place, I think Indian rupee has done pretty well since Raghuram Rajan took over at the RBI. I think Rajan has really just instilled some confidence in what the central bank would do to handle or to mitigate the impact of policy changes elsewhere. I think importantly as well, fundamentally you get some improvement in current account numbers. But I think the situation remains one where fiscal deficit is still large, current account deficit remains in place, although smaller than initially feared. Therefore, when the Fed begins to taper, you should expect some pressure on the rupee, together with the rest of EM in general. But for the rupee and for other countries with negative current account balances, the pressure could mount again. So what are we seeing right now insofar as the RBI is concerned? The RBI is likely, in my view, intervening to sort of build a buffer with larger reserves, to prepare for the time when tapering actually occurs. If you look at the last reserve numbers, for example, RBI has bought some reserve in the market, and I think that could be the case again for the next few weeks. In other words, while tapering has been delayed, dollar Asia, dollar rupee could be heavy. I think RBI could be buying at around about 61 or any levels below 62, buying dollar to build a buffer for when taper comes in.
Nizam, do you think tapering is going to be more like a storm in a teacup? Because everyone is prepared for tapering this time. In the month of May earlier, when Fed first time used the word tapering, that was like a shock wave. But this time around, whenever tapering will start, it will be prepared, and the world is also preparing for that event.
Right. Yeah, there has been some level of preparation, both psychologically as well as fundamentally. Like I said, current account in India has improved, for example. But I think that, there is a lot more to be done. Current account deficit is a current account deficit. Now, if you think about tapering as a flow in the financial account, then you think through the BOP argument, the balance of payment is one where you get the current account balance plus capital account balance. Now, when the capital account balance becomes negative because money is taken out of India, then you do not have the buffer from current account surpluses like Singapore, for example, and therefore there'll be some pressure. But you're right. I think given, psychological preparation as well as fundamental preparation, I think the impact will be lesser. Still, I do expect dollar rupee to go up higher, probably towards 65, should taper happens. And I think the point is that when taper happens, and as we lead towards change in the Fed policy bias, then there will be capital outflow.
Nizam, the key concern seems to be bond yields, which continue to remain elevated at over 9%. Besides, there are high inflationary expectations as well, which do bring about the scare that perhaps the RBI is going to hike interest rates come next month. What, according to you, is keeping bond yields elevated?
Yes, you're absolutely right. I mean, inflation is a key factor there. And I think at the same time, funds are not buying into Indian bonds as aggressively as well. So, you put that together, foreign funds, and so you put that together and you get that elevated inflation expectation, pushing interest rate higher, broadly speaking. I still expect the RBI to keep on tightening bias. In other words, there is still a chance of another hike going forward, especially should the rupee weaken again. And I think those are all being priced into the higher yields for now.
Nizam, do you think global market watchers are not recognizing the price action in crude? Because for the first time, even though we are in a risk-on environment, commodity prices are down, and crude is now making lower lows and higher highs because it is sitting at a 5-month low.
Yeah, crude has fallen a lot, actually. In fact, last night it fell again, and this time it was more on the supply side concerns, because refiners are apparently producing more than expected over the last couple of weeks. So for me, I think crude, together with commodity prices, could remain suppressed. Although, like you said, higher lows in recent weeks. But I think the concern on commodity prices probably different right now. I think when the Fed is printing money with no end to be seen, then commodity prices are elevated because of fear of inflation. I think it is now the opposite, because people are talking about the end of unlimited buying. People are talking about the end of QE, possibly over the next 12 months. And therefore, in that environment, commodity prices will not be so elevated. So that's going to provide some support, at least, for the rupee. But I don't think it's going to be a major support. I think at the end of the day, capital outflow is the big concern, and RBI is acknowledging that by building reserves.